Welcome to Streamlining Insurance, brought to you by the Risk and Insurance Educational Alliance, providing a practical advantage at every career stage. I'm Darren Bloomfield, the insurance guy at Feathery. Joining me is Charles Merritt, CEO at Buddy. Hey, Charles. Good to see you.
Hey Darren, how's it going?
Good, man. Good. Well, thanks for joining us. Just kind of wanted to start with a brief overview of Buddy and kind of your career path before.
Sure. So you can think about Buddy as being the digital operating system for insurance commerce. So anywhere that carrier, broker, agent, or point of distribution wants to provide a great insurance commerce experience, whether that's direct sales, agent broker enabled, or even everybody's favorite subject, embedded, we provide the software layer that powers that transaction and moves the premium for our customers. So that's what we do at Buddy. You asked about sort of my background. I have I would say, divergent path to get to where we are today, or perhaps convergent in different direction. But I started in the world of media production, which actually led to working in online media, and that allowed me to see what I was really passionate about, was actually building the software and the products that enable other people to achieve the things that they want to in their lives. So from internet media, I actually moved into like pure consumer tech. I worked at Kayak on the marketing team there, then moved over to jetsetter.com and headed up the initial marketing efforts there. Jetsetter was acquired by TripAdvisor, so you might know it as part of the TripAdvisor portfolio. I ended up taking a little bit of time to go to grad school. And while I was in grad school, I raised some money with a professor that I was working with. And we raised money from the Interpublic Group. So they're an advertising agency holding company. And we were working on bringing early stage consumer tech and consumer enablement type companies to market. And after grad school, I ended up going in-house with a company I'd been advising that was a fintech company. I joined them as their CMO. And unfortunately, the company didn't work out. Anybody who is going to be at ITC and wants to hear some crazy startup stories, you're welcome to come find me. But through that sort of transition into fintech, I realized that what we knew about consumer tech and storytelling and helping users achieve their goals was super valuable in the financial services sector. And when I started working back out of like the IPG portfolio of companies, working on some of their insurance clients and some of the other financial services clients, it kind of all lined up for me. I was like, okay, there's this wave that has gone through payments and card and lending and banking of turning sort of the traditional form factors of these financial technologies into something that's really works in internet commerce and for the modern customer. And that wave is going to eat up insurance. So that was our original awareness, you could say, in 2015, 2016. And then in 2017, I really started working in earnest on what would become Buddy with a couple of co-founders. And we recognized that we could take a couple paths. And one path would be to say, hey, look, we know the answers. We are going to build the future infrastructure of insurance and just go sell it to the industry. But that path looked like doing long, uncertain enterprise sales paths, ending up with really slow product feedback loops. So we weren't going to be as iterative as you really need to be in order to be innovative. So we took a different path, which was actually to build our own insurance product. So in 2018, we launched the first on-demand accident insurance product. So you could get covered same day for mountain biking, skiing, all the kind of fun stuff you might like to do, where you get a little bit of extra, need a little bit of extra coverage on the insurance side. And this gave us the insight into what it takes to really power an insurance product from soup to nuts. So everything from the initial solicitation of the offer through quoting, binding, issuance, the administrative back end requirements to be able to sell insurance in a digital context. And we enjoyed growing that business, but the distribution was heavily reliant on people getting together to do fun stuff. So when you're distributed through organized events and venues, and a pandemic shuts them down for 2 years, it's either let's hang up our shoes and go home, or let's go ahead and accelerate our technology thesis, because that's really what the business was about in the first place. And so, of course, we chose the latter. So I'll pause here, because it's kind of the inflection point in the story as to how we became what we are today, where we went through this experimentation, growth, and sort of chaotic cycle, and then we came out as an enterprise software company. So, yeah.
Yeah, no, I mean, I think that's interesting, just from my own brief experience in like the tech startup, insurtech space, is like you need to get your first client to be like a real company, and it's like it's a lot of risk of trying to identify that first client, first niche to kind of attack. When you're like crossing that chasm of growing from startup to enterprise, and that first opportunity you had of narrowing down on the accident insurance, like quick turnaround, same day coverage. That's kind of like the beachhead that you guys landed on to kind of get your positioning, build out your proof of concept, and then grow. What was kind of like the research or market research or like background product market fit, and like finding like, I mean, accident insurance, like I knew it's like out there, but that's like very obscure to like kind of land on.
Well, I think the way that we looked at it initially is that we really did take an approach of what is the customer behavior that we think the future is going to look like. And we recognize that the shift toward embedded financial services insurance is absolutely true. We also knew that customer customization of financial products was a key piece of it. So we designed that original policy with a Lloyd's syndicate, actually, to be able to get as little as a day or as much as a year, any duration in between. So we wanted to give the customer the ability to sort of fit it into their life. We also knew that the ability to have instant fulfillment, sort of modern payments and checkout as part of the policy, we knew that those were critical technical requirements too. And that is what the future of insurance should look like, right? It should be like everything else we buy on the internet. And so we got to the accident piece as almost a secondary approach, right? Because we looked at the market and we thought about, where do we observe gaps? And the founding team, we're all active people, mountain bike, climb, ski. And we looked into our communities and we're like, oh man, people keep sending around GoFundMes to pay for, these terrible bike crashes. And so we thought about where we could try to make a difference and where insurance makes sense for the people that we spend our time with in our lives. So we really took a customer first approach to what the policy should be. And then, we kind of looked at the rest of the market and, identified like, hey, yeah, this is a real need, a real market opportunity. And if we grow this product up and it goes gangbusters and we become an awesome like lifestyle insurance company, that's not a bad outcome. But our backgrounds are mostly in tech. And so we knew that we were basically dog fooding something that we were going to sell as a broader platform, or dog fooding a platform that we're going to bring a lot more products onto in the future. And so that's really how we thought about our initial approach.
Yeah, no, man, I think that's interesting, of focusing on like serving the customer, the end user, and just kind of leveraging like the knowledge of your team and kind of identifying like that what's missing, and kind of really leveraging like your team's individual skills, and like, I mean, just leveraging the knowledge you guys have. But on a note of like focusing on the consumer behavior and like not what customers are kind of doing now, because like how customers are interacting now is based on like what tools are in front of them. It's not very like futuristic or future thinking. So just kind of like thinking about like, what is the ideal situation for the customer? Like, oh, I mean, I hate like oh, wave the magic wand. Like, what's your ideal situation? But kind of like on the note of embedded insurance, and how like that term, and like it's becoming like it's gaining a lot of traction, like in insurance. Like, why do you think that is? Like on first, like kind of deep dive on like what embedded is, and then kind of like some use cases are like actually going to pan out, and some is just kind of like fluff.
Yep. Well, I mean, you identified the most important question off the bat, right? What is embedded insurance? And I think that we are, as an industry, not 100% aligned on that definition. I know that it's something that we are often asked to support for our customers, and that's great. We've done a ton of it. Uh, but for me, embedded insurance means that the insurance product is sold as part of a core transaction that is a non-insurance transaction. So the embedding of the insurance in things that we're familiar with, like flights, travel's been doing this for a couple decades now. So the idea that embedded insurance is some novelty idea, even in digital environments, I think is misguided. But the opportunity to embed insurance in different channels, I think, is what's emerging, right? More of the sort of core, like consumer commerce, even small business commerce, looks like an e-commerce transaction, right? So I can go buy my, fleet of laptops for my employees. I can do that through Apple, and I don't have to call some enterprise tech salesperson to get me a bunch of laptops. So why would I not want to put a Apple Care product on that laptop as part of that transaction? And then the billing is associated with the payment method. So that's the other piece for me that's really important and embedded, which is there's a single input of payment at the checkout. And that payment is then able to pay for whatever the core purchase is, plus all of the premium for the insurance products. So I think that embedded is insurance that is sold as part of another transaction. And I think the why, to your point, why is this exciting now? So I think that ladders up to a slightly more macro market point from my view, which is that we have, in the insurance industry, recognized for years that this internet thing is kind of coming for us. It's knocking at the door. But there hasn't been a catalyzing event in the industry that has given large insurance companies a reason to strategically diverge from straight ahead quarter to quarter profitability. And I think what we saw during the COVID pandemic was a wake up catalyzing moment for a lot of big companies that said, ooh, I might need to diversify my distribution strategies, because if my traditional methods of having brokers and agents on the ground is bringing in 70-80% of my written premium, and suddenly people aren't as comfortable with that face-to-face interaction, workplaces are closed, so I can't go sit down in the lunchroom and walk everybody through their benefits. I've got to really now think about this as not only a sort of commercial norm for what consumers expect, but this is actually now an important strategic imperative. So I actually see embedded as one of the channels of digital commerce that carriers are trying to shift to grow their market share and to create a more diversified set of distribution channels, to create a more robust base with a more robust business at the top level.
Yeah, no, I mean, I couldn't agree more there, Charles. And I think you're kind of pointing out two interesting trends. Is first on like the company side of, as you said, kind of large like insurance carrier or whoever, and then also like their customers being, the insured in this case. So in order to change like behavior, it needs to be like convenient, mostly for like the customer. Like if the customer is the end buyer, like there has to be a reason for them to like want to change their behavior. Like people are like resistant to change, so in order for them to like want this embedded experience, it needs to be like very frictionless and easier than the prior solution. And then also, as you pointed out, on like the company side, there needs to be like a need to change their processes. So as you pointed out, like if their current distribution is struggling, or if something is now starting to go wrong, that creates almost necessity to change. And that's why the carriers would invest in this. But also like it's kind of a waiting game for that to happen. Of like, I guess, I mean, I wouldn't say like people got lucky with COVID, but like that kind of, as you pointed out, is like the distribution of not going to conferences, and now we have to kind of change how we roll out different stuff, and people aren't getting together in person. That event might have helped with like timing on becoming more tech focused. I mean, some people like work from home, remote, and like the Zoom calls, like a lot of things changed because of that. And I mean, some stuff is going back to the norm or whatever as we go on, but some things are never going to go back fully to the old way pre-COVID or whatever. But yeah, I mean, I think that's interesting is because especially in like very large corporations, there's like a risk to do something new. So then like it's like a risk and reward balance of, hey, there's already risk because this isn't working correctly. So like if I can take a little risk and try to change it, then like I'm not putting myself too out of place, because if I don't do anything, I'm at risk too. Like it's kind of, I mean, large companies, I mean, are sometimes slow to move for that reason.
For sure. And I think that there's a question of incentives alignment, but I also look at this from an opportunity perspective. If you think about how much insurance is sold with a buy button and money movement on the internet in an e-commerce mode, when we survey our customers, they would say no more than 5%. So let's say that globally, maybe it's 10% of insurance is actually sold on the internet. We're looking at, 8, 9, $10 trillion of spending that is not e-commerce. And looking at what we see with our customers when we move them to modern digital commerce is that they're seeing, 40% to like 5x higher conversion on their quote to bind ratios, because e-commerce is a faster way to sell the product. You're giving customers self-serve experiences. You're putting it in the hands of the customer in a way that they're already used to buying. And you're enabling your distribution to work in parallel, right? If I'm a broker and I have to do dual data entry into a portal versus sending out 10 texts to prospects that I've already pre-quoted and saying, hey man, just hit Apple Pay and you're good to go, that conversion rate is massively improved. So the way I think about it is the carriers who are going to move first into real digital commerce are the ones who are going to win the next generation of customer, hands down. Now, there are components required for that. There's the ability of their organization to understand what good internet commerce looks like. And I think that's an experience gap for a lot of carriers. When we go talk to prospects, talk to our customers, there are people who really know insurance inside and out better than I will ever in my lifetime understand. Why certain things are the way they are, how to correctly price risk. That's not my expertise, right? I have spent my career in consumer tech, fintech, figuring out how to create good customer experiences and moving money around on the internet. And so that is what we're good at Buddy.
Just leave it to the actuaries, right? Leave it to the actuaries.
Yeah, that's right. Like they create the products, we onboard them into our system, and then they can use our tools to go sell them anywhere they want to sell them. To convert higher and have better data fidelity and easier go to market in all their channels.
Yeah. So kind of on what we were talking about of like roadblocks to this embedded insurance kind of like evolution. Like, as you said, some carriers are going to move first and are going to be like rewarded for that. And besides what we already covered of like people being like resistant to change, like what are some of the other roadblocks, like in like a technical roadblock, a regulatory, or even like kind of a culture roadblock?
Yeah, I mean, technically there are no roadblocks that we have seen. Like we have built a technical solution that can universally embed insurance into any transaction, regardless of surrounding environment, payment requirements. Check that box, right? Like that, we figured that one out. The carrier cultural pieces tend to be around a few things. So one is, what types of partnerships should we be doing for embedded insurance products? So do I care about talking to retailers? Do I care about talking to vertical SaaS? Do I want to talk to OEMs in different environments? Those are the kind of things I think the industry is still figuring out as we try to expand into the next hundreds of billions or trillions of dollars of new insurance that's not being written in the embedded world. And so I think that sort of deal flow is definitely one of the things that the industry has to figure out. The other is getting comfortable with the basically lack of regulatory guidance in the US, especially for how this should work. And my reading as an industry expert, but not a regulatory expert, is that there are, by and large, few agreed upon rules for how we should be doing embedded insurance. And mostly what I see carriers trying to do is avoid areas where the industry has seen penalization in the past. And carriers have different ways of interpreting what that means. So, we can talk to some carriers who are very comfortable with having clearly branded insurance offerings in a third-party website because the insurance is clearly branded as coming from the insurance company. We have other carriers that we work with who are like, nope, that site has to absolutely have, producer licenses, even though it is fully branded as, this is being solicited by, XYZ company. And my understanding of the regulation is that there is a clause about reasonable confusion to the consumers in most states' regulation around presenting an insurance offer. And so where that gets bogged down is that regulatory counsel looks at that and they look at the URL the page is being hosted, that's hosting the page with the offer. And we've decided that some carriers think the URL has to reference the insurance company. Some carriers think the URL doesn't have to reference the insurance company. I haven't seen that really in any state regulatory codes. Just like, okay, we feel this way, we feel that way. And I don't know that any of those people have done any actual market testing to say, hey, who does the consumer believe is buying this insurance? Who knows? But there are dozens of issues like that where a risk-averse industry, who ironically traffics in risk as their primary business, doesn't want to take on these complex technical issues in a way that they think creates any exposure for them. They feel like they are big targets generally for, lawsuits, regulators, all that kind of stuff. But I think the opportunity is to come up with standards and practices for how we work in e-commerce and try to build out some of those, standard ways that offers are being presented. Try to build out frameworks that can be universally applied across the industry, whether it's property and casualty, A&H, whatever line of business. So an example, one of the things that we've created at Buddy is a concept that we call the producer controlled code environment. So at Buddy, we do actually hold our producer licenses, which is how we're able to compliantly solicit, bind, and collect premium on behalf of our customers. And so we offer our customers the ability to have code that's rendering from our servers as a licensed producer, engage with the transaction of the insurance product in a third-party environment, and then actually conduct that transaction and issue the policy in a way that is entirely coming from the code base of a compliant entity on the licensing front. And so we've sort of created that architecture. We've talked to some of our customers. Some of them like it and have taken it to regulators and, they feel good about it. Some of them have said, nope, it's that URL thing. That is a non-starter for us. We'll never, ever do it. And then, we end up in this sort of almost Kafka-esque impasse where we're not talking about something technically. It's just about how people feel. And it's not related to any real regulation. It's just fear of retribution of some sort. And so I think those kind of things are issues that the industry has to work through. And I'm not saying that the carrier is necessarily wrong either in their hesitance to do these things. I'm suggesting that there is a lot of opportunity available for carriers and brokers who come up with sort of good faith working solutions to address the meaning of regulation in a world in which the rules are not written for the technical realities of how most people want to buy things today.
Yeah, I mean, I guess what tends to happen from what I've seen is either the lawsuits are going to start coming in and then people are going to change it, or people are going to be proactive and try to get ahead of the curve here. But I guess we'll find out what happens But overall, I mean, I think it's very clear that the future of insurance is going to look very different very, very soon. I mean, of course, with what you covered with what Buddy's doing, and just with how like Feathery itself is kind of helping like underwriters and brokers kind of eliminate a lot of like manual work from workflows. So something I just think a lot about is like how are these technological advancements going to like change the type of roles and like skill sets that someone entering the insurance industry needs, and then like how should these teams, like how should people that are in like management or higher up at these companies like think and prepare for the shift in talent?
Yeah, I mean, I think we can all agree that we are moving to a world that is going to be some hybrid of interface and AI as like the operating system, right? Where we see this in the software world where we've got AI co-pilots working alongside us. I think that the insurance industry is a fantastic industry to think about how AI can make it exponentially more efficient. And the carriers have treasure troves of data. One of the things that we've been working on at Buddy is providing the core systems for agentic commerce. So where a consumer can say to an AI agent, hey, go buy me car insurance from this carrier. And Buddy can provide that core transaction component that their AI shopper can interact with to create an auditable data format for that product. So the AI accurately interacts and transacts the insurance product. And we've thought about our sort of core data engine that we use for e-commerce and how that is going to enable machines to understand how the insurance products work. And so I would suggest that anybody who is considering building out a team at an insurance carrier, they spend some time thinking not only about what sort of modern customer commerce looks like today, but where are we going from a behavioral perspective in terms of where do we get our information? Where do we think about, informing a trusted decision about a high consideration purchase like insurance, and look at how people are using the basic sort of ChatGPT models, but then how are people now able to take the fundamental tools of large language models, small language models, some of the machine learning techniques that have actually been around forever, that are now having their resurgence, and how do we take those technologies and provide verticalized expertise around insurance? I think that's going to be a huge advantage for the carriers who can move quickly, being optimized into AI, thinking about things that I purchased that I don't understand or want to learn more about. I'll go fire up Claude and be like, hey, help me understand this. Like, what are the frameworks for decision making in this kind of purchase? That's something that I will use AI for to help me understand the macros, right? And if I can figure out what the framework is that I need to operate in, then I can go interrogate specific products, or I can say, hey, what kind of reviews are there for this vendor versus that vendor? And the ability for insurance companies to think about how they're externalizing themselves into that world is going to be a fundamental game changer, and is going to enable some of the folks who you might see in that, like, call it 5th through 20th market position. I think they have a huge opportunity to take on the 1 through 4, 1 through 5 in the market, by becoming willing to use modern commerce tools and AI commerce tools faster than the larger carriers might. So I think that if I were going to go say, like, who do I want to talk to if I'm looking to get in the industry as someone who's thinking this way, I would say, like, go figure out who's in a category you're interested in, figure out who the number 7 player is, and say, look, we're going to go up to number 5, or we're going to go up to number 3, because we are simply going to move faster, and we're going to be smarter about what the modern customer wants, and we're going to put that first. That has to be first, not second, not third.
Yeah, I mean, I think exactly what you said, and also like it's very clear of the push for both speed and distribution. Like even with say like the rise of MGAs now and like program administrators and like binding authorities, And then I think also what you said of like the more educated consumer with like these tools. I mean, insurance is a pretty complex product by nature almost. I mean, like it's a contract, and the white papers rule, and whatever's on the white paper, like it's just like it's very litigious, it's very regulated, it's very legal focused, which makes it very long and complex, and I mean not very fun to read the policies. So having like these AI tools makes the consumer more educated. How do you think that's gonna like help shift the future of insurance, and how say like insurance is sold? I mean, like we know
Mhm.
about all the ads, and I don't know if we can name them, but the animal focused
The
ads that
menagerie of insurance mascots.
yeah, okay, they'll just keep it very very general and neutral.
Yeah,
We don't want anyone coming after us here, but yeah, the
right.
animal mascots of insurance. And I mean, there's a few reasons for that. I just wonder if it's ever going to change, and if this is kind of the start of it changing. I mean, I think it makes sense to an extent of like appealing to a story, as you said from your marketing background, and then when the
Mhm.
product is very complex, leaning more on entertainment instead of actually educating the consumer. But I mean, it's also kind of frustrating because like online and TV and whatever is the ads focused on like personal lines, like home, auto, life insurance, something like that. That's very personal lines focused, and then the actual like commercial lines is so segmented. Like a risk manager, one person or one department at large companies is very segmented with their purchasing power. Like a commercial risk manager is buying, easily some of them like more than $1 million in premium, like very easily, like more than annually. So as a commercial lines carrier, you don't put ads online for that kind of stuff, because you just go through the distribution channel and you get a hold of that risk manager, and then they'll buy your products. But I think like what kind of happens is the public perception of insurance is really just based on these personal lines ads, which then has several downstream effects, especially like the future talent pipeline of insurance. Like if I don't know anything about insurance and all I see about insurance is auto and home, and I would think, I could think that's boring and not want to work in insurance, where really like personal lines is a very small fraction of total, insurance written premium.
Yeah. So, so that conversation about we're using our marketing avatars instead of talking about our product, and what does that really mean when it comes to the general public's perception of the insurance industry? How does that relate to our talent pipeline? Yeah, I think that there's another piece of it. The complexity of the product is certainly one reason that advertising is an effective tool. The other piece of it is that there's a commoditization of insurance. So, especially in just personal lines, like what really is the marginal difference for me as a customer between carrier A and carrier B? And maybe there's a promotional rate, maybe I switch every 14 months, whatever the way that I'm getting my risk more effectively covered. Yeah, maybe I like the person I talk to, and that's sort of the classic like why brokers and agents. So like we're always going to be part of the value chain. But I think that the need to advertise and for the advertisement to be such um, a third thing that's distant from what is this product really to me speaks to commodification. And when we get into, I think for insurance nerds who are like, hey, let me figure out like this weird specialty risk and figure out how to price it, I think that that is a fascinating world. um, and I would suggest that when I am buying insurance for my business versus buying it for myself, I am no less frustrated with the forms and PDFs that a commercial broker sends me than I am when I am trying to buy insurance for my 401, right? Like that is still a bad experience for me as a purchaser. And so it doesn't, from the buddy perspective, like we actually don't really care about whether it's personal lines, commercial lines. We care that the person buying it has a good experience with the product, because that ultimately, at the end of the day, that way that I feel about it, that's the brand. And so, when I buy it, that's my first brand moment as an insurance company. Maybe I had an ad, that was the first touch. But when I'm buying it, that's really my first like interaction with the product. And then the second one is when I file a claim. And the claim, of course, is the one where everybody spends a lot of time focusing on like, hey, look, we got to get the claims process right. We've got to be accurate. We've got to be fast. We've got to remit money the way that a customer wants to receive money. So there's a fantastic art and sort of science. And there's some great companies that we've seen in the market who focus on that claims experience. And I personally think that the value of good customer experience can start much earlier than the claim. And so that's why we focus on the sort of the initial transactional piece of the puzzle.
Yeah, no, I mean, I think that definitely makes sense of kind of pointing out like the user experience, just because it's like B2B versus B2C, like I'm still, buying my own personal lines, and I'm also involved in buying like business insurance as well. So like, I think,
Yep.
It's still an individual at a company that is buying the insurance. So exactly what you said. So kind of as we wrap up here, just predictions kind of in the future of, like I would personally see that personal lines would adopt embedded insurance quicker than commercial. That would just be my guess. And I think there would be most resistance in commercial to like premiums, say above like 100K. Like I think the larger the premium, the more quote unquote like traditional, broker to carrier and back to insured, like kind of the current established pipeline. I think that's probably going to be reserved and more resistant to change. The higher the premium is, or the more specialized the risk is. That would personally be my prediction. But kind of curious, what do you think over the default buying experience for insurance, agent driven, embedded, or kind of a hybrid? Fast forward a few years.
Yeah, I would suggest that in the sort of embedded model we talked about earlier, those personalized products make more sense to be quick movers. But I also think that the broader context of what we talked about today, and that shift overall to digital commerce across all kinds of products and all types of buying scenarios, moves toward more agentic commerce and AI supported commerce. Those are trends that are going to touch every single line of business. Imagine that I've got a container ship full of, whatever container ships are full of, furniture, right? And that I'm trying to ship.
And that would be a part of the underwriting criteria is what are you transporting?
Well, there you go. Right. So if I can talk to like AI Darren, my underwriter, and be like, hey, look, man, I've got 30 tables, 40 chairs, and 10 grand pianos on here, and you have built out the sort of core way that your underwriting models work for cargo shipping, then AIU can be having this conversation 5 or 6 times at the same time. So you're no longer constrained by your physical form in starting to get some of these processes going. And I think that's where agentic commerce and AI start to transform some of the lines into digital commerce that the industry is not really thinking about yet as appropriate for internet sales, right? I think this is an insurance industry challenge to understand that internet commerce is not just the simple stuff that you press the buy button on the homepage. It is a robust industry, and there are phenomenal technologies for selling complex products online that have been around for a decade plus now. And I think the industry thinks about it as like, hey, we can only use this technology for selling the simple consumery type stuff, instead of thinking about, well, like, how could we use the tools that are in so many other sectors of the economy to make our giant section of the economy run more efficiently? And I think that is a mindset shift that is one that I'm still waiting to see a carrier really make and pursue. And I think that there are some examples of this, right? Like you look at some of the last 5 years of the insurtech, SPAC and IPO crew. So your Lemonades of the world and Hippos, who sort of understood intuitively, like, yeah, we just have to be all in on using all of the technical tools that are available to us to go to market. And I think that they've proven that you can build very solid insurance companies on those tools. And, time will tell how their books play out and all those kind of long-term underwriting questions. But in terms of providing great customer experience, I think they've proven the case clearly.
Yeah. And then, I mean, with that train of thought, to an extent, wouldn't you kind of think that for some lines of business, the future value of the modern day underwriter, like the modern day underwriter is very technical and has, a lot of underwriting is pattern recognition. Like, oh, I've seen this similar account or this exact account in the past. I priced it at this because of these exposures. And it's almost like pattern recognition as an underwriter. Could it be that in the future for some lines of business that the underwriter is almost more like training and developing like these algorithms, or kind of like coding, not like coding, but I guess a lot of AI is like prompting and kind of teaching the algorithm?
Yeah, absolutely. I mean, that is something that you could build on top of Buddy today. If you're an underwriter who said, look, I know how I am going to handle these rating rules. Here is the product that we are rating. That's something that our system is able to power the commerce behind today. And we actually work with a couple of different AI companies. So we work with the Gemini team, among others, to think about how those things fit together. So yeah, that use case is not a future use case. That is currently possible. And I think a way for a carrier to create massive efficiency in their underwriting process.
Well, sign me up for that one. I really love prompting. So there we go.
You know where to find me, man. Come on down.
Well, thanks so much for your time, Charles. Appreciate it.
Absolutely, Darren. Thanks for having me.